Hey traders out there in Traderland, D7 here with Grok Trade. I have a little bit of a rant I'm going to do at the end of this video, but let's get talking about the markets. First thing we're going to look at is the S&P 500 Spider. This is a daily chart. I have a line chart up now because I do not want the mess of Japanese candlestick bars messing up the visual here. Do you see my lines here? You'll see that we have moving average lines coming up, and we have the big blue line. This is the price line of the S&P 500 Spider. And then you'll see these trend lines. Okay, I know there's a lot of lines, but I want you to really hone in on a couple things. One thing that I'll watch for as a technical analyst is when price gets above these moving averages, I want to see the moving averages acting as a trampoline. Do you see how it hits these moving averages? It hits as a trampoline. Now we go below it. The question is, do we get yanked back up? This one it does. It gets yanked back up, bounces. It goes underneath them, yanked back up, and it bounces off, bounces off. This one went below, did not get yanked back up. Do you guys see that? I want you to see this. This is very simple, but I'm just doing support line with this big trend line coming up. So not only did it go below the moving averages, it went below the trend line and it didn't get yanked right back up. And then we go below quite a bit to the rising 50-day moving average, the red one here. We rally back up. Because it rallied back up, I was able to plot a new trend line. That's my point. There's my node popping up on that point. But what's interesting is we come up in that moving average act as resistance. Do you see this? Act as resistance. It came down and goes above a little bit and then gets yanked right back down. Okay, do you guys see this? Now we're just caught up in a flattening moving average. It's a confluence, if you will, of these moving averages, and now they're, instead of going up and flaring apart, they're on top of each other and going sideways. That is telling me we are slowing down. This drop in this little bear flag looking thing looked really bearish to me, but look how we popped up above that trend line, making all-time record highs. Do you guys see that? So all the news says all-time record highs, all-time record highs. Everyone's saying this and getting all excited. Well, what I know on the big time frame here is we have these red lines going up. The reason I have that is because we have this huge MACD bearish divergence. MACD is going down while price is going up. That's a bearish divergence, and this thing can get bearish. It can get really bearish, guys. So this is something to be watching for. Now, if I go over here to the diamonds and take a look at this, we're right at resistance on the Dow 30. Right at resistance. So we're at resistance. We have a rising wedge, which is a bearish trend reversal pattern at resistance with the red line. That means we have a bearish divergence. Do you see the bearish divergence coming across here? So the question is this line going lower? If I double click this, you can see that it's definitely going lower here. So we're definitely dropping. And I'll go back, and by the way, I am using this is TradingView, and these guys help us out because of our YouTube channel. They help us out with these charts, so we're affiliated with them. But feel free to use their services. We love them. And check this out. We're going higher here, lower there. RVGI is also going lower. I just don't have a line drawn there. So the question is this bullish or bearish? And this is definitely more bearish than it is bullish. If I go to the Qs, look at that. That's, again, a nice rising wedge, very easy to see. And we have this red line going up because that tells me, if I bring up these indicators and oscillators, we have this going lower. Do you see this? Lower swing highs, higher swing highs on price. There's your divergence. The RVGA also going down. I just don't have the line drawn there either. I could definitely plot this line. If I go here and then down, I could do that. And you might think that looks flat, but it's not. If I click this, you can see that this is definitely going southbound. So, and if I go back, that's kind of, it looks very flat there, but it's not. So this is also a big time area of resistance and a bearish divergence and a rising wedge. Everything pointing to a recorrection at some point in the apex of this. If I go to the Russell 2000, if you look at this, we have this divergence and even a quicker divergence here. Look at this. If I go here, we got a double divergence. We were already diverting on this line. If I open this up, it is slightly going lower. Do you see it? And then we have this one going extremely lower. And that is what we're looking at with this data. I could probably get rid of this line and just look at this trend. And are these two lines coming together? They are. That means it's a rising wedge. And do we also have a droppage of the RVGI? We certainly do. If I don't have my RSI on here, I could definitely put it on there and it would show a divergence more than likely. So the other thing I like to look at here is financials. Financials are really important to me. So we're going higher here. There's a divergence. And we were going lower there. But look at something here. Do you see how we're going lower here? But what happens here on financials, you have this step up. You can see the step up right there. If I go back, you can see this is going down, but that's going up. That is telling me right now, let me see here. Actually, I'm not liking that. Hold on, staying corrected. I'm going to get rid of this. This is not a bullish divergence. I thought we had one going. We do not. We do have a little bit of what looks like inverted head and shoulders at this moment. If I were to take this and bring it the candlesticks, it's harder to see, but that is more bullish than it is bearish right now on a quicker time frame on financials. If that holds true, the rest of markets could go higher. But look where the moving averages are in relationship with price. We're below it mostly and now getting entwined into it. That is going to be a major issue. These are like sticky spider webs. So just know with this big bearish divergence that we could have a major droppage take place, especially being a rising wedge. Not too shabby. If I go over here, the US dollar continues to climb. It will stay strong as long as it stays above that trend line and those moving averages. Be watching that. Gold did a major retracement. And anytime you go to these extreme highs, get big volume, it's called capitulation. Of course you sell up here. Of course you do. And when it does drop, you don't want to be holding this anymore. Gold and silver, big time people taking their profits head and shoulder. You can see that. And when it broke that trend line, you knew the game was over. And there we had a sizable drop, big volume up here at the highs. It's a very indicative. VIX had spiked. Now it has come back down, and we are coming to a support line on the VIX. So we're hitting the support line. Will it bounce? It could bounce here. It's something to be watching. And just a quick look. We're rounding out the month here. I just want to look at the weeklies. So if you look at the weeklies, I have an RSI divergence. I wrote it up here. We're going up. There's the RSI divergence right there. Not good. So this is on the spider. If I go to the diamonds, we go up here. We have divergences, multiple. We have a MACD divergence. We have an RSI divergence. My Grok indicator has a sell signal. And did it have a sell on spiders? Yeah, it had two sells on spiders, and we continue to go higher. It's unbelievable. Qs, tech, going up, RSI divergence. You can see this. RSI divergence is right going here. The line has disappeared. Has disappeared. If I need to re-put it there, go here, and there it is. We have that. Russell 2000, if you look at this, we broke a major area of support. Look at that, or resistance rather. Boom, up, looking really, really good. So this one, I don't see any much problems with it. We are going higher here. If you go to here, we are definitely going higher. I do have a MACD, going lower. And I also have a here to here. Hold on, that might be higher. It definitely, if I go here to here, it's lower. That's interesting. Let me see. I want to check something out. Same back. Okay, so I like that. So we do have divergence there. Financials on the weekly chart, big rising wedge. We're caught up in the moving averages. We're starting to get below it a little bit here. Big, nasty bearish divergences across the board. And I know the month isn't over yet. It will wrap up next week, I believe. And you take a look at the monthly, you will have a just up and away, broke resistance, but we have this big RSI divergence. This is again monthly chart. We've got many months in a row. We're being lulled to sleep. And look at this, right? Major resistance on the diamonds on the monthly chart. Big nasty divergence. You can see it there. Q's monthly chart going higher and RSI going lower. Russell 2000 monthly chart going higher. Breaking resistance. We're looking really, really strong. And this is MACD is going lower, RSI is going lower. Financials monthly chart, very important to me. Where resistance, we go up resistance. Now we're showing weakness at this resistance. This thing is begging to drop. Look how the blue line on the MACD and the red line are starting to come together. Blue line's coming down. Do you see that? You can almost see it crossing here. That means this will be dropping. And look at the, we're going higher here on price action. RSI is going lower on financials. US dollar monthly, down, 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 little bull or bear pennant, like this thing could get, like this could get bearish. Gold, if you look at that, it has retreated from the highs. See that? Retreated from the highs. Silver, big retreated from the highs. We have what's called a shooting star on across the board on these. You don't want to be holding gold and silver at this moment. And a quick look at Bitcoin. If you look at this, it's holding its own in this uptrend, going up, building a high base. This could be a high base breakout, but we do have a divergence taking place. Also, here is my rant. You guys can go now if you're done with technical analysis. And here's the rant. Guys, I've been in the markets a long time, trading since 1998. And while I've been trading in the markets, I have seen many major market corrections. It's starting with the 2000 bubble crash of the techs. And that I was a new trader my first 2 years of trading and had to survive in that environment. And had several since then, including the Corona crash. So the reason I bring all of that up is because one thing I know is anytime you have a 2 year, 10-year bond yield inversion, and we have it, and then that inversion rights itself, it reverts back to being corrected. It's usually 100 days after that, you get a major market correction. We haven't had it. We didn't get it, at least not yet. And then there's something called the SAHM rule, SAHM rule, that triggered August, not this past August, but 2004 August, and it has never been wrong. Guess what? It has proven to be wrong. So not only did we have the bond yield inversion that is not proving to play out like it normally does on giving a big market correction. Then we had a confluence of the SAHM rule saying, "Yep, this market is toast going into the future," and we haven't had a major recessionary pullback. And then not too long ago, just days ago, Hindenburg Omen triggered. And if you don't know anything about it, it's basically some dude that says, I'm going to go back to all the market crashes and look for a common thread that always happens before that. And he came up with that. Anytime you get one, it's called the Hindenburg Omen, but you need to have multiples of those, at least two. We have one already. Now, we need a two or a three before the markets really fall out of bed and crash. But what's fascinating to me here, gang, is this going to be yet another thing? Because the Hindenburg omens, the last 10, only 3 of them played out to be recessionary pullbacks. In other words, it's been wrong roughly 66% of the time. And however, when you have that, you don't want to ignore it, because when you have multiple Hindenburg omen signals in a relatively short amount of time. It's usually correct on a market top being put in and a market recessionary pullback commencing. So I look across the board on monthlies, weeklies, dailies, and see all these big time bearish divergences. I see the sum roll getting smacked upside the head. I see the bond yield inversions getting smacked upside the head. And the big question is the Hindenburg omen going to be smacked upside the head too? And the big question is, why are we bucking the system? Because right now the market's rallied because the CPI coming out. That CPI came out and it's forcing the hand of the Feds to drop rates. And everyone got excited about it. And let's pump up the markets, pump up the volume. And that's precisely what has happened. And the question is this a short-term little rally getting everybody excited? And you get this market, market top blow off, which could happen. And I think, and I used the term earlier, we're being lulled to sleep thinking that everything's hunky dory and everything's going to keep going up. And it certainly can, and it has. And, it would be silly of me to want to start to go big time bearish right now, as much as I want to with everything that I'm seeing. However, that is an amateur move. You have to trade what you see, not what you think. Big difference there from professional traders and amateur traders. So we want to see that the markets are falling out of bed, not because you could be wrong a really long time and still be right. Now think about that for a second. Sleep on that one. Well, I think that what we need to do is be very careful in this market. It's hard to go big time long right now because we're flirting with death. Like anything could topple this thing. But we're seeing an administration and and what we're doing on policy that has keeping this market going up, keeping unemployment low. So this is a really good thing, meaning this administration has defied gravity, has defied the odds. And I'm really pleasantly surprised by that. But as a trader, when you're gearing up and ready to make some fat cash because the market's dropped 66% faster than it rises, and you've been holding cash forever, the frustration levels kind of increase a little bit because it's a patience game. One thing we ask two questions with our mentor students, and this is a big point that I'm sharing with you is before we even accept a student come in, we ask these two questions. One, give me a time or an example of the time that you're highly disciplined that goes beyond the norm. We don't care about you brushing your teeth. We care about doing something else that's highly disciplined that shows you have a great discipline, muscle. And then we ask a question on give us examples of where you showed great emotional resolve when the average person might not have been able to show strong emotional resolve. The reason we ask those questions is because we found out that the students that do the best are those individuals that have strong discipline and those that have strong emotional resolve. If you don't have those two things, it's just like a gambler. Gamblers, they don't usually have discipline or strong emotional resolve. That's why they give you free booze to heighten those weaknesses that people have to exploit people from losing more money and faster at the casinos. In trading is very similar, but we're the house. We trade with the edge. And so the question is, we could be the most brilliant technical analyst and see that all these topping situations are taking place, just like what we see in gold and silver already dropping. The same thing can happen with the stocks and does. So if we're doing that, the idea is to have the discipline to not be early, because if so, you could be wrong a long time, still be right, but cost you a ton of money. A ton of money. This market tuition is very expensive. And when it comes to emotional resolve, your emotions, your hunger and for greed and making money and jumping in early because you want to be the first to jump into something before it falls out of bed, could eat your lunch. So, but if you have strong discipline. You have strong emotional resolve. You won't get suckered into making decisions that's just going to bleed you dry. So I hope all of this is the mentor moment with D7. I hope you learned a little something there. Give me a like if you've learned anything at all. It doesn't cost you anything to hit a thumbs up. So with that, if you made it to the end, say made it. Only you and I will know what that means. Take care, guys.